Manishi Raychaudhuri is now joining us, Asian equity strategist, equity cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. You know, there was a note from Sanjeev Prasad of Kotak saying that the rally in broader markets and the way we've seen over the last 1-2 months kind of is making it harder and harder to find ideas. Although when you look at price action and the way stocks are being bid up, I don't think there is any dearth of ideas, at least momentum. What do you make of it, especially the move in the broader markets, Manishi?
Right. So valuations are a bit.
Okay, I think we are having some issue with the line. We'll try and fix that and go back to Manishi in just a bit from now. Some technical difficulties, what it seems to be. Okay, Manishi is back with us. Let's give it another try. Manishi, go on.
Right. Sorry, yes, I'm back. Thank you. And, I think, the valuation question that you raised, that is justified. Earlier, not in the last couple of weeks, but prior to that, the rally was essentially in the large cap frontline names. And therefore, when investors try to search for ideas in the frontline names, maybe in the top 50 or top 100 stocks, valuation could be a bit challenging. But at the same time, I think now what we are seeing recently over the past 2 or 3 weeks are the mid caps and small caps catching up. And that could happen going forward. I mean, I think the next leg of the rally is being led by the mid caps. But at the same time, from a foreign investor's perspective, the kind of investors that we interact more with, that struggle to find attractive ideas in India at a reasonable valuation could be a challenge, because the relative valuation, valuation premium rather, which had actually contracted quite a bit in March, April, have picked up again. It has gone above the one standard deviation level. So, I think for the near term, the market could take a bit of a breather, maybe what's called a time correction in the stock analysts' parlance. I think we may be looking at that kind of a scenario throughout summer.
Okay, so time correction perhaps on the cards. For as long as I've tracked the markets, I've understood that time corrections are perhaps the best time to accumulate individual stocks. You get a chance to buy stocks, not when the market is soaring and not when the market is falling, right? So tell us, what should you be buying at this point in time? In the consumption space, autos have been doing very well. And there is this theme of how exports have bottomed out. The worst is behind us. Within that theme, anything that you like?
There are 3 sectors in India which are seeing consistent earnings estimate upgrades. The first are financials, which the consensus earnings estimates have been upgraded almost 10% over the past 6 to 9 months. The second are industrials, where I think this whole, idea of increased infrastructure investments and therefore spilling into private capex at some point of time, that idea is now picking up. And the third are consumer discretionary, and that is where autos fits in, what you pointed out just now. So consumer discretionary, that include white goods, includes jewelry, includes automobiles, particularly four-wheelers, not so much two-wheelers. So these are the sectors that we are also looking at. In fact, in our Asian model portfolio, if I look at the India sliver in that, these are the 3 sectors that we have presence in. And in addition to that, we also have a presence in TMT, the tech and telecom universe. Even though tech has been a bit muted over the last 6 months or so, there have been some, sort of, I wouldn't call them warning, but cautionary stance sounded by some of the frontline companies as far as order inflows are concerned. But we still like that sector, in view of eventual recovery in order flows from the developed world.
All right, got that. Manishi, hi, good morning. I want to get your sense on life insurers, because that's been one red hot area of the market after it was practically written off, in February after the budget. And now suddenly the market seems to have, taken a liking to it. What's your sense and what are your recommendations on life insurers, or insurance in general, actually?
right? So, when I talked about financials, with a consistent earnings upgrade, I actually include the life insurers in that bucket. We have, quite contrary to the market perception right after the budget, we have actually liked the life insurers, and we have not too many, but I think just one frontline life insurer among the India stock selection bucket that we have in the Asian portfolio. We believed that right after the budget, because of the tax related to the changes in the tax policies, the sector was beaten down too heavily, and that was unjustified, because the essential story here, which is of increasing penetration and the earnings growth driven by higher interest, higher returns to the life insurers, that story actually stayed intact. And I think the market is actually coming around to that view.
All right, before we let you go, what would the mega theme or the big trend be for the rest of 2023, you think, especially from an equity market perspective? Are you looking at any big themes? I mean, of course, some of them have played out, whether it's something like defense or even electric vehicles. Anything else that you like?
I think in general, one should look more at the infrastructure and industrial, that space. This consumption story has possibly, I wouldn't call it played out, because this is a multi-year theme as far as increasing consumption and increasing penetration in India are concerned. But industrials, both in terms of increasing government capex and eventually increasing private capex, maybe even defense capex, these are the themes that investors would have to more actively look at right now. I think, it started performing, but it's still early days there.
Shriram Finance, by the way, is up 12%, 12.5% now, I think. So it's moved up a little bit more. The high, which has been made, is almost $1,800, 1794 or so, and now at about 1750. That's a surge which has come through. Do you track this one, Manishi? Any thoughts at all? And large number of blocks happening, right? We put out a figure,
right.
some 14,000 crores of blocks which have happened just in the last, I think, 1 or 2 months or so. And so people are monetizing. I mean, private equity investors, promoters at high levels, but all of it is getting absorbed in a very seamless way. Any thoughts at all, briefly?
Yeah, I think, I obviously wouldn't comment on individual stocks, but, this the phenomenon that you referred to, which are the promoters and, they're taking advantage of large blocks, it's likely to continue because, this is not only an avenue for private equity investors to make an exit. It's also an avenue for the promoters to sort of realize the value of the investments that they had earlier made. And it's now that, as a consequence of the Indian market's performance, as a consequence of the support that they're getting from the domestic flows, which has become a, routine feature of this market, that this avenue has become feasible, and it's likely to continue going forward.
All right, Manishi, we'll leave it at that. Appreciate your time here on CNBC TV18. Thanks a lot for joining in and have a great day.